Good afternoon, everyone. Thank you for joining us today. Presenting today is Amanda Vella. She is the Senior Director of Business Advisory and Transition Consultant at ATB Financial. Her topic for this session is value acceleration. Amanda is focused on providing tailored advice to clients on business valuation, value acceleration, effective exit strategies, and long-term financial preparation for a business transaction. Amanda has over 17 years of experience in finance leadership, business advisory, strategic and financial planning, corporate finance, and business valuations. Amanda is a chartered accountant, chartered business valuator, certified exit planning advisor, and a certified high performance coach. Thank you, Amanda, for your presentation. Good luck, and I'll be back at the end just to help close things out.
Okay, great. Thank you.
Thanks.
Okay, so yeah, my presentation today is on value acceleration. And as we go through the presentation, you'll realize that a transition-ready business is really a valuable business. And what I love about this methodology is that it's great for any business owner, wherever you are in the cycle. And the great thing I'm seeing in my practice is a lot of business owners are adopting this methodology a lot earlier in their business to really make sure their business operates in that valuable state. So at ATB, we really like to tell stories. So I thought I'd start with a story about how I became so passionate about this topic. And it was back when I was working on my first M&A transaction. I had just done the business valuation for this company. You know, there was great value there. They had gone and seen an advisor 2 years prior to do everything to get this business ready for sale, which, you know, in accounting terms, is typically they do an estate freeze. They make sure it qualifies for the small business deduction for capital gains. So this business owner felt they were doing everything right. And they also felt they were at their wits' end. They were exhausted and just couldn't continue on. They really needed out. Their health was deteriorating and they just couldn't continue at that pace. But what happened is when we took the business to market, it didn't sell. And as I found out, this is quite common. And the things that really caused it not to sell was there was a huge dependence on the owner. He was working night and day in the business. And there was no way to take him out easily. There was hidden tax liabilities that a buyer would have to assume if they bought the shares, and they were still using old processes like paper GLs. So maybe one of these things would keep a buyer at the table, but having all of these issues really scared all the buyers away. So that made me really passionate at, you know, finding ways to create a better outcome for our clients, because you know, I didn't want this business owner to have to go through this and have to lose all that wealth that he had spent all those years accumulating in this business because we couldn't sell it. So yes, my name is Amanda Vella, and since Sandra already read my bio, I won't go through it again. But you know, really, my job at ATB is to work with our clients to go through this value acceleration methodology that I'm teaching you today. I would work as part of the ATB Wealth Group. And really the premise is we want to make sure the business and the business owner has both sides ready, the business itself and the personal financial planning to exit their business so that we can protect and preserve the wealth that that business owner has created. So some of the facts that, you know, were really alarming to me, and you may help to understand why it's so important to do this work, is that, you know, business owners know that it's important to have succession planning, but it's often the one thing they really don't want to do. I have business owners tell me that they would rather die in the business and have a conversation with me about someone else running their baby. We know 21%, you know, there's various statistics, have a formal plan in place, but I would even say those that think they have a formal plan, sometimes it's outdated. Sometimes it involves transitioning to family members or management that they haven't had a conversation about. And you know, the risk is that those people do not want the business. So there's a lot of gaps, I would say, even in the 21% that we see that do have some sort of formal plan in place. We also know that 75% of business owners regret selling their business in 1 year of exit. And this is often due to the fact they haven't done enough life after business planning. This is their baby, they're going through grief, and they often think golfing, spending time with the family, that these things will be enough to sustain them once they've left their business. But you know, we know that a business brings so much more to business owners. It's their significance, their meaning, their reason for getting up in the day. So without having a clear plan on what's going to fulfill them in those ways, once they sell their business, then they often regret it and get very miserable. So we want to improve that outcome for our clients. We also know that of the businesses that go to market for a sale, only 20% of the businesses actually sell. So that's a really low number. So we want to make sure that we're doing everything we can to give our clients the best chance of their business selling. And we know roughly 20% of businesses sell in the owner's timelines. Most of the times it's something unforeseen, like a death, disability, dispute, departure, or divorce. And these are the saddest situations, because if some of this work hasn't been done, then we're often in a situation where we have to liquidate the assets, that the business may not be able to operate without the owner in place, because so much is in the owner's head and in their contacts, their relationship. So if there is a huge owner dependence issue and something happens, then we tend to get fractions on the dollar of what the business is worth when we have to transition the business. These are some US facts, but they're very similar to what we're seeing in Canada. So we are embarking, as many of you probably know, on the biggest wealth transfer in history. They say globally, I've heard around a $10 trillion opportunity, really because all the baby boomers are retiring and all of those businesses need to change hands. So in the US, they're estimating 250,000 businesses to exit by 2030. And of those, only 50,000 would be deemed market ready. And we'll get into what really that means, market ready. Of that, 30,000 will likely transact. 16,000 would sell a concession. So that's a lot of earnouts, which we're seeing a lot of right now. I'm sure other speakers are talking about this in this COVID environment. And of that, 14,000 would sell at the desired selling price. So our job is to really try to get as many clients down to that desired selling price as possible by doing this value acceleration methodology. The process we use with clients, and there is a book called The $10 Trillion Opportunity, which really goes into detail on master planning. So I would recommend that book to anyone that's wanting to dive deeper in some of the topics that I'm discussing today. But really the idea of having a successful transition is on this premise of a stool. If these three things are in place and are of balance, then we'll have a successful transition. If one of these things are missing, the stool becomes wobbly and the transition will not be as successful. So the first one, and where I'm going to spend the time today, is really on maximizing the value of the business. And even if it is an internal transition or a family transition, this is also the steps needed to make sure that the business transitions successfully and keeps operating of value post the owner exiting. We also want to make sure that you're personally and financially prepared to exit. Do you have good wealth planning in place? Do you know that you're going to get enough of this business to retire and live the lifestyle you want post-business? If you're younger, do you have the capital? Do you want to reinvest in another business? So it's really understanding personally where you want to go and that you're financially prepared. And then that last piece that I talked about that is often overlooked is ensuring that you've planned for the third act of your life, that we have a really robust plan of what you're going to do post-selling your business, because you're really in a state of grief. And without that plan, it can make that grief of losing your business, even planned transitions, a lot easier. So maximizing the value of your business. So these are things that we do with our clients that you can do on your own. So we use this value acceleration methodology. And really what I love about this is that we look at both ends of the valuation. So a basic valuation, as you probably know, is you adjust EBITDA. You take away one-time items, you make owner salaries at market, you take up the personal items, anything that would be left for the buyer at the end of the day. And there's a lot of work we can do to make that a more predictable and sustainable cash flow, clean up the balance sheet, and make efficient operations. And that's where a lot of advisors spend their time. Now, the range of multiples, that is determined by the market. You can't change that. That is what it is. However, what we find that is if you improve the business attractiveness and readiness, you can increase where you fit in that range. So you can get a higher multiple. And really what we're doing to attract the higher multiple is the steps to de-risk the business. So we're reducing the risk the buyer needs to take on, so they're willing to pay a higher multiple. So by working on both sides of the simple valuation equation, we accelerate the value of the business. That's why we call it value acceleration. And really what we're doing is implementing great business strategy, which is why we're seeing, a lot of younger entrepreneurs wanting us to help them with this so that they have a great foundation to really do a growth acceleration plan. This is just good business management if you want to scale your business. So to show the impact of this, I want to put some numbers to it. So if you had 5 million of adjusted EBITDA today, and say your business operates at 3 to 5 times range of multiples. So where you sit today, you're at the low end of the range. That's a $15 million value. Say we do some work and we get the EBITDA up to $6 million, and we move you up just one time. So you're not even at the top of the valuation range. Now you're just sitting in the middle at 4 times. That's $24 million. So that's a $9 million improvement, or a 60% improvement. And I really emphasize this point. I work with a lot of wealth advisors, and typically business owners have around 80% of their wealth tied up in the business. And wealth advisors will spend a lot of time on that 20%, which is usually the house, the investment portfolio. And there's only so much you can do with that small number. But you get us in to help work on the 80% of the business. We have an opportunity of generating a lot more cash, and thus, this is a much better way if there's a gap in what you need for retirement to make up that gap. So this is the evaluation acceleration process that we work with our clients on, and this is something that you can do yourself in your business. So the first is a pricing analysis. So it is basically the basic business valuation, the EBITDA and multiple. Don't call it a business valuation because it's not a formal opinion, and we would refer to a formal chartered business valuer to do a formal opinion where appropriate. But for this purposes of really getting a baseline, this work is sufficient. And we put a little more science to where the business fits in the range by assessing how ready the owner is and how attractive the business is to transition. And I'll talk about in a future slide what some of those items are, so you can start to rank yourself as to where you think you fit in the range. And that gives you a base point. That's a good base point for doing personal planning, to know if you'll have enough for retirement, and just look at what you can do now in the business to increase that number and that value. Once we've had detailed conversations around readiness and attractiveness, then we can do some business strategy and personal planning to really come up with a prioritized action plan of what's we really need to work on both sides and what's most important in priority. Then we move into 2 streams. So we work in 90-day sprints. There's a lot of accountability. So there's monthly accountability meetings that the work's being done. On the business side, we work on a max of 5 things because we don't want to take away from operating the business and deteriorate the value in any way. So we really want to make sure there's plenty of capacity to keep working on the business, but it's attacking those items we found that will really enhance the value. And then on the personal side, usually every 90 days, we'll work on one of these areas. Like we'll do an estate plan, or we'll do a tax plan, or we'll do some advanced wealth planning, that life after business planning once we get closer to a transaction. So we will work through all of the areas of a good personal plan. Typically, if there isn't a will and some trust work in place, then we will start with an estate plan. And then once all that work is done, or we feel like we've done the low-hanging fruit, we move on to step 4, which is if the business owner wants to exit, we would refer them to an M&A advisor, get the support they need to exit, or we'd help support them through a family transition or a management buyout. Or what sometimes happens is when we clean up the business and we remove some of the stress points in the process, we create a business the buyer will love, but we also create a business the owner loves even more. So sometimes they just really want to stay in the business longer than they anticipated, which then we can look at the advanced value acceleration process, which is really, do we deploy growth capital? Do we look at tuck-in acquisitions? Do we look at a new location? So those things that are going to take some money, that's what we would do at that advanced acceleration phase. So I just want to highlight this because it was surprising to me, even as a business valuator, just how many businesses fall into this unsaleable category, that we often assume that there's just the low end, high end of multiples, but there is this piece that's unsaleable. So if your business ends up in that unsaleable state, what we often have to do is just liquidate the value of the assets, which is not a good place to be. The other reason we see a lot of businesses fall in here is they're actually a lifestyle business, which means we can't differentiate the business from the owner. So if I am Amanda Vella Consulting and you come and work with me because of who I am, and I'm the only person you work with, that is really hard to pass on to somebody else. So in some cases, that is the case, they're lifestyle and we can't transition it. But in other cases, we could help develop processes, create staff, move those relationships. So there are times we can move from a lifestyle business to an operating business, but there's just some businesses that doesn't work. And at the top of the triangle is what we call best-in-class businesses. So these are the ones that attract the high end of the multiple range. And that's where I want to spend my time. Like, how does a business get themselves to that top of the multiple range? So these are the things that I think you should work on and that you can rate yourself and understand where you are. Now, it may be surprising why owner readiness is a concern with selling a business, but what we find is that if the owner isn't really ready to exit, they can do a lot of things in the process that will self-sabotage the deal. I affectionately call it that they get squirrely at the 11th hour because they're not emotionally ready. So some of these things we are doing in this process is to make sure the owner keeps their head in the game through the whole transaction process, that they've done a lot of consideration as to what's next. They are really excited about that life after business plan, that we've done wealth and estate planning for them so that they know their number. If they know they need $10 million to retire and somebody offers them $10 million, they should feel very comfortable now that they have enough money to effectively retire. One of the first things we do is a contingency plan. If something were to happen tomorrow, who can I put in charge to run this business? It may not be the person you want to transition to. They may not be ready. You may be still training that person, but is there someone that would be a great general manager that knows enough of the day-to-day to keep the business operating and keep the wealth being generated? Making sure you have up-to-date buy-sell agreements with any other shareholders. And this last one is making sure family and shareholders are on the same page. We deal with so many family businesses that want to transition to the next generation, and the next generation may not want the business. So it's really important that you've had those open and very hard at times conversations with family about what your wishes are for the business. When we get in the business, it's really about starting to create a strong data room and having that credible financial information. Of course, audited financial information is the best, but if you're not there, even getting a review done, or at least, saving some really great financial analysis and monthly reporting into a data room. The other thing is start to think now about the things that you want to negotiate as one-time items. So, with clients, obviously there's some things going on with COVID right now that they would want or feel that they should be able to normalize from their earnings. Start creating your documentation now around those points that you want to be adjusted when you go to market. We want to see great KPIs and ongoing monitoring. How is management managing the business and being proactive instead of just reactive? And also, if they aren't using business valuation as a KPI, it's something I really encourage. Personal items in the business, of course, those can be negotiated in a transaction, but why waste your negotiating power on personal items when it's something that you could take out well in advance and leave your negotiating power for better adjustments? That you have all your process documented, that it's easy for somebody else to come in and know how to run the business, that your systems are scalable and transferable. And a big piece around this right now is obviously your IT infrastructure that is safe, secure, that you have cybersecurity protection in place. All those things are very important to lower the risk. Customer contracts, we want to know that the business, that if a buyer buys a business, that they'll do business with that buyer and they're not just doing business with the owner. And customer contracts go a long way. Strong intellectual property. So really a big chunk of good business transition for best in class is, getting paid for goodwill, which is all your intangible assets. So creating a strong case, whether it's, filing for IP, having good documentation around your customers, having good brand value and showing what value the brand brings to the organization, the more you can create a good, strong story around your intellectual property, the easier it will be to get money for it. That your workforce is engaged. We're seeing things like Glassdoor play a bigger role in some of the due diligence around companies and understanding what's really going on at the employee level. Supplier contracts. So again, they want to make sure that the pricing the business owner gets is the pricing the buyer is going to get. And also, we really saw through COVID that supply chain issues can happen. So if you can have multiple suppliers and decrease the risk that you'll have a supply chain issue, that's also great. On the business attractiveness, of course, owner dependence is the key issue and often where we have to start. And to decrease the reliance on the owner, you really need a quality management team behind them. Having long tenured employees goes a long way, and that's not something you can fix overnight. So that's something that takes a little bit longer, but with effort you can help decrease your employee turnover. Prove that you have a loyal customer base. Really be focused on your customer service. Reoccurring revenues, this is a huge one. Businesses are finding really innovative ways now to have a reoccurring revenue stream. You can buy a subscription for almost anything. You can have a subscription for flowers, for candles I saw the other day. So I would really get creative on how you can create reoccurring revenue streams if you don't have them now. Again, strong brand awareness, it goes a long way. No customer concentration. So if you have 1 or 2 customers making up the majority of your customers, then, trying to diversify that and get more is really important. As much as you can clean up lawsuits and compliance issues ahead of time. And then even if you're not in the position or don't want to invest in growth right now, because I wouldn't encourage you if you're looking to put a ton of money into growth, you can create that story and start creating a really great story that can go into your sale documents about what the growth opportunities for the business are. So obviously, if you really go through this in detail, you're going to have a long list of things that you could do, and you're not going to be able to do everything. So how do you prioritize that? So where we like to start is obviously the quick wins, the ones that don't cost a lot of money to do, don't take a lot of time to do. So this can be, documenting processes, getting those contracts in place, just starting to save financial information, starting to report on KPIs. What can you do that is a quick win to de-risk the business? Once we get through that, then you can move on to some of the strategy stuff. How do I find recurring revenue streams? How do I diversify my revenue base? How do I start creating good stories? So you can get into more strategic things. Then, we can get into some efficiencies. How can I save costs? Maybe implement a procurement program, other things that are going to save capital. We put efficiency before growth because if you've done some of this work and you get your processes efficient, you get your costs efficient, then you create some capacity in people and cash to look at some growth strategies. So these are something we would do. That's when we really move on to the advanced value acceleration. And culture's last because it's a really tough one to throw money at and a tricky one that you can waste a lot of money in the process. But what we find with our clients that are going through this methodology, that if you continue to create that culture of accountability, execution on every 90 days, doing these things, you create a really good culture around relentless execution that a buyer will love. The other point I want to make on efficiency, sometimes I see this with business owners, is they try to slash and burn costs, right before they sell. And buyers will see through that. They will look, sometimes we get away with some of it, I won't lie, but they may see that and know that and add back that they would have to hire a few more people, that you're operating on such a shoestring that it's impossible to do for a long time. So with the efficiency, the longer you can have that in place and really create that story that you're able to operate that efficiently for a long period of time, the better chance you will be compensated for it in your sale. So again, back to my point that if you do all of these things, you really operate day-to-day in a transition-ready state. And what that does is that if an unforeseen event happens, even if you're not looking at selling today, and you have the peace of mind that the business will operate and your wealth will be protected. And that unforeseen event could be those 5 Ds that I talked about that are really bad, but another unforeseen event, of course, could be that you get an unsolicited offer. And if you have that offer on the table, you want your business to be in the best light possible to accept that on a whim. I post lots of content on this topic and lots of things on business transition. I have lots on if you add me on LinkedIn there, you can just find me with Amanda Vella. You'll see I have a lot of things pinned to go into more detail of this. Because I know I went through things rather quickly today, but really just wanted to give you as many ideas as possible of stuff you can do in your business to get it ready well in advance of thinking about a transition. You can also email me at amandavella@atb.com. Again, ATB Financial, if you don't know who we are, I know there's probably a lot of people from Ontario, but we are an Alberta-based bank that's owned by the government. So we are focused in Alberta, but I'm always happy to have conversations and help business owners and help get them in the right direction to get the help they need. So with that, maybe I'll just check to see if anybody has any questions or if there's any of the topics I covered. So we do have a few minutes left if you wanted me to go into more detail on them. Just checking the Q&A here.
Hi.
Hi.
So I was just going to say, are you able to put in your email and post your LinkedIn as well into the chat?
Sure.
Yeah, just so it's a little easier for those who are watching to be able to jot that down.
Yeah, I will do that. I just need to move this out of the way. LinkedIn. Sorry, I'm just getting my link for my LinkedIn. Although it is my name, I was lucky to get my name. There's no numbers after it or anything like that.
Oh, okay, yeah, no worries. I'm just checking here. Okay.
There's LinkedIn.
Okay, perfect. You had mentioned some other resources. Do you have links to that, or is that just something that that people can get if they email you?
Yeah, if they email me or on your LinkedIn page, there's a featured section just under kind of your picture and stuff. So there I have pinned a ton of resources. We have at ATB a succession planning pillar page, which really covers all the questions our clients ask us on succession planning. It's a really wholesome document where you can click on all the kinds of articles. So that's linked. A similar presentation to this webinars that we've done and a lot of other articles we've posted around succession planning are there.
Okay. Is there anything else that you wanted to add just as we close out the presentation today?
No, I mean, the biggest thing is get started sooner rather than later. If you have some of these tax issues that can take over 2 years to clean up, like I say, we can work with business owners, in that growth phase. So there is no too early of a time to get going on this, but I would say at least 2 years is ideal to really clean up any tax issues that we find through this process.
Okay. All right. Well, if there isn't anything else, I know we're ending a little bit early. But what our viewers can do is they can head over to our networking section where they can actually meet some of the other individuals at the event just before we close out the event today. Okay?
Sure. And if anybody has any questions, feel free to reach out to me after.
Okay, perfect. Thank you so much for your presentation.
Great. Thank you.
Thank you. Bye-bye.